What's good, you guys? Welcome to another episode of Weekly Outlook. In this video, we will be discussing about gold, euro USD, DXY, GBP USD, and AUD USD. In the previous weekly outlook, I had mentioned that I'm expecting prices to be sideways and there could be a lot of volatility. Like whenever you are in extremely smaller, narrow range, uh, you're bound to see prices moving aggressively from one corner to the other. And this is pretty much what happened this particular week. So let's try and understand what we can expect in this particular week on gold and other currencies. So looking at gold now, gold has formed a classic inside bar at the top, right? So generally this gives a bearish signal in general, right? Because price have been trading right inside the previous week's range, which means there has been a lot of compression, right? And now a break of this particular compression can lead to extremely trending moves in the market. So in very simpler words for layman to understand this, if we break above 2009, there is going to be a very bullish move in the market. I'm expecting 2100. Of course, 2070 odd levels could be your first ones, first target, but 2100 is something that I've been talking about since a very long time, and I think we can achieve that. But if we fail to break that in that particular scenario, we if we break 1934, then it's a clear downfall back into 1850 zone, or maybe even lower. So I would highly suggest you guys to be very careful in this particular week as well. Why? Because prices have been aggressively been dragging at the top. This could be a possible distribution that is playing out, and there can be a continuation below, right? And maybe even lower than this if at all we fail to hold this, because this looks like a weak move on the upper side. It's very aggressive and coming from a very smaller demand area, right? If the demand area was as strong as something like this, if you see, so this is something very healthy, and prices won't easily come to test this. But in comparison, you see this is a weak movement. But let's see, irrespective of we hold or not, there's a very strong possibility we'll touch this. So I would again be looking for short opportunities this particular week. If at all we break above 2009, only then my bias will change. Let's look at euro USD. Okay, on euro USD as well, we have very similar price action. We have been trading inside the previous week's range, and there is compression, so possible continuation at the bottom, and you can target this particular demand area on a daily time frame very easily, in my opinion. Yeah, very easily you can target this and take short opportunities. Now, where to take short opportunities, I've already marked them, and I think this is 1 hour. Yeah, so on a 1 hour, this is a very good supply area around these levels, so you can take a short opportunity right from this. If not, then there is immediate supply zones right above, something like this on a 30-minute time frame. These are the levels. So you can either look for this or this, in my opinion, but both of them are valid, and can target below. I'm expecting this week could be a very trending one, because the previous week was compressing. Now GBP USD. Now this was the trade that I shared in my on my signals channel, and this is a very good 4% move on a currency, right? So this of course is a swing trade, and what the explanation behind this is very simple. We have this as the highest point in the market, and we have broken structure. After this, we have become bearish, basically, in simpler words, right? And this is a simple retest of that previous high. So naturally prices are again going to come below, and this time might even break this particular demand area. But anyway, our job is to make sure to get out at very good possible exit zones and make the best out of any trade. So I would highly suggest you guys to look for opportunities, for short opportunities on GBPUSD from this particular supply zone, 1.23866 to 972 odd levels. So this is this looks like a one very good possible re-entry, or any other pullback that you get. I would highly suggest you guys to enter in this particular trade and make sure you manage your risk accordingly. Then if you're not comfortable with such a huge target, you can easily target at least this. In my opinion, this is still 2.8% move on a currency, which is not at all small, right? The swing trades essentially help you build your account rapidly and with less risk. Why less risk? Because the probability of you going wrong on a swing basis is naturally very less compared to an intraday move. So anyway, let's look at AUDUSD finally. On AUDUSD, we have been seeing very dirty price action. It's just sideways compressing again, right inside this particular range if you observe carefully. All right, 3 weeks we have spent sideways on this. Now this is a clear simple sign of redistribution, and prices might continue below. They might break this low and continue lower, because DXY looks bullish to me. So it makes a lot of sense to look for short opportunities on other pairs, like Euro USD, GBP USD, or USD, and any other XXX USD pair, right? So yeah, I think this is it, guys. Pretty much simple. I would highly suggest you guys for the GBP USD trade, try to enter this particular one. Even on Euro USD, to be honest, there's a very good trade. Right? Any of these supply area you can enter and target at least this particular swing low. Right. So wait for opportunities. I'm sure you'll find one and enter a short position, because trades like this comes once a month, I would say, or maybe once in 2 months. And these trades, they help you grow your account on a very considerable level. So yeah, I think this is it, guys. Thank you so much for watching. If you like the video, make sure you share it with your trader friends. Let me know in the comments below what do you think about this, and if you have any other doubts or suggestions for me to analyze anything else, so let me know in the comments below. Till then, take care. Have a lovely week, trade safe, and I'll see you in the next one.